I now hand the conference over to Mr. Abhishek Murarka from IIFL Capital Limited. Thank you, and over to you, sir.
Thank you, Aman. Good evening, everyone, and welcome to the conference call to discuss CreditAccess Grameen's 2Q numbers. From the company, we have the entire management team represented by Mr. Udaya Kumar Hebbar, the Managing Director and CEO, Mr. Diwakar BR, Director of Finance and CFO, Mr. Balkrishna Kamath, Deputy CFO, and Mr. Nilesh Dalvi, Vice President, Investor Relations. I will now hand over the call to the management, and after a brief opening comment, we will open up the call for Q&A. I would also like to take this opportunity to thank the management for allowing us to host the call. Thank you, and over to you there for the rest of the call. Thank you.
Thank you, Abhishek. Good evening to everyone, and apologies for this late evening call. I thank you for taking your time and joining us today to discuss our second quarter FY21 financial performance. After reviewing collections in first week of June, we have been witnessing an improving trend on month-on-month basis. Despite several intermittent lockdowns, localized restrictions, we have been able to increase our collection efficiency from 70% in June to 88% in September and 89% in October. Our strong customer relationships, deep rural presence, majority of borrowers being engaged in essential activities, and highly motivated field force helped us to record relatively faster recovery in collections. The collection trend temporarily slowed in second half of October due to cyclonic floods in certain districts of Maharashtra and Karnataka, intermittent lockdown imposed in Chhattisgarh, and a brief period of festivities-related chain collection days. Now, with the end of loan moratorium, good control over COVID situation, and restrictions getting gradually relaxed to allow normative functioning of the economy, we expect further improvement in collection trend in November and December as more and more customers resume normal repayments. The experience so far helped us for the readiness for any second wave or third wave of COVID, which we really do not expect. The proportion of non-paying customers has also declined over last 4 months from 17% in June to 18% in September. If we exclude the pre-COVID PAR customers, this further comes down to around 6%. Further, in the month of October, we have seen improvement in customer activation. Around 24% of customers who didn't pay in September have paid in October, and we expect further momentum in this front. Deploying additional experienced senior staff in low recovery regions and reassigning old staff wherever necessary helped us to closely engage with customers who had opted for moratorium and motivate them to resume repayments. Overall, looking at the current customer repayment status, we are expecting an eventual tail around 4%, which we must closely monitor over next few months. As the ongoing situation is gradually improving, and as the customers getting back to their normal activity levels, they will require additional funding support, and hence we expect them to come back to start repayment. We have gradually resumed the disbursement only to existing customers who displayed repayment consistently over initial 2-3 installments. With an increasing comfort of our customers' repayment behavior, we further increased our disbursement, reaching to INR 1,420 crores in Q2FY21 compared to 46 crores in Q1 FY21. The disbursement growth further gained traction in October as we started adding new customers and onboarded 38,800 new customers in October. Our October 20 disbursement touched 972 crores, which were higher compared to 881 crores disbursed in October 19. This indicates normative business growth going forward. Over the last 6 months, we have been taking all necessary measures to strengthen our liquidity position. Improving collection trend and continued support from our lenders have helped us to maintain a solid liquidity with 1,662 crores cash and bank balance as on 30th September, which amounting to 15.1% of our total assets. We also successfully completed qualified institutional placement of rupees 800 crores in October, further bolstering our liquidity position. With higher liquidity, we will have little negative carry, but we believe it will be worth holding higher liquidity for some more time. We continue to strengthen our risk buffer in line with our conservative approach. We are with early recognition of delinquencies and building adequate provisioning coverage. Based on the risk profile of our borrowers and their current repayment behavior, we have set aside rupees 65.3 crore provisions in Q2 FY21. While our GNPA, considering no change in NPA recognition after 31st August, in accordance with the Honorable Supreme Court order, is 1.66%. For provisioning purpose, we have considered the actual GNPA of 1.82% as of 30th September. Our total ECL provision now stands at 480 crore, which is 5.35% of loan assets. If we exclude GNPA of 1.82% as on September, then overall shared asset provisioning is 3.53%. Overall, on the back of improving collections from field, robust liquidity position, adequate new branches, trained employees, and adequate risk and capital buffers in place, our business strategy during remaining 5 months of FY21 will focus on portfolio growth and new customer additions, leveraging our leadership position in the microfinance industry. We expect a normal FY21-22 in front of us. I would also like to highlight the transition of Mr. Diwakar BR as Group CFO and Director at CreditAccess India NV, our holding company, and appointment of Mr. Balakrishna Kamath as CFO at CreditAccess Grameen Limited. Diwakar BR has stepped down as CFO and Director of Finance at CAGL to assume a larger role as Group CFO and Director at our parent, CAI. Apart from the strategic support from CAI, there will be higher focus to strengthen our access in global debt capital markets and increase the share of international borrowings. Well-diversified and stable liability profile across domestic and foreign sources will be pivotal for CAGL's long-term strategy for delivering consistent high growth while operating within the current construct of Invest MF5. Diwakar's transition will further strengthen this process. Subsequent to above, Mr. Balakrishna Kamath has assumed the role of CFO at CAGL. Bala joined CAGL as Deputy CFO in March 2020. He has solid 27 years of experience across various Tata Group companies. Prior to joining CAGL, he was associated with Tata Capital Housing Finance Limited as CFO and Compliance Officer. He is member of Institute of Chartered Accountants of India as well as member of Institute of Company Secretaries of India. My hearty congratulations to both Diwakar and Bala, and I'm sure their contributions will continue to strengthen CAGL's liability profile even better. Talking briefly about Mlm4 Performance, MLFL also displayed healthy collection trend in the collection efficiency, increasing from 54% in June to 83% in September and 85% in October. The number of non-paying customer groups significantly reduced from around 40% in June to 7% in September. Further, around 33% customers who didn't pay in September have paid in October. With this encouraging trend, we gradually increased our disbursements, reaching 220 crores in Q2 FY21 compared to just less than a crore in Q1 FY21. The disbursement growth further gained traction in October as we started adding new customers and onboarded 9,700 new customers in October. Our October 20 disbursement touched rupees 160 crores, which was higher compared to rupees 158 crores disbursed in October 19. The liquidity position of MFL also improved to INR 243.9 crores as on 30th September, amounting to 11.6% of total assets. As a process of gradually aligning MFL's ECL policy with CAGL, we continue to build additional risk buffers by setting aside 25 crores provision in Q2 FY21. While our GNPA, considering no change in the NPA recognition after 31st August, in according to Honorable Supreme Court order, is 1.21%. For provisioning purpose, we have considered the actual GNPA of 1.52% as on 30th September. For ECL provisions now stands at 82 crores, which is 4.3% of loan assets. If you exclude GNPA 1.52 as on September, then overall standard provisioning is 2.78%. Now I shall quickly brief on our quarterly results and then we can proceed with Q&A session. On standalone basis, our gross loan portfolio was up 16.5% YOY to INR 9,207 crore, and borrower base was up by 6.1% to 28.02 lakhs. NII grew by 8.5% to INR 272.8 crore. NIM was at 11.1%. Adjusting for the negative carry impact on account of maintaining higher liquidity position on the balance sheet, NIM would have been 11.7%. Cost to income ratio was 39.2% and OPEX to GLP ratio was 4.6%. PPOP grew by 9.7% YOY to INR 170.1 crore. PAT was down by 22.5% to INR 78.1 crore on account of accelerated provisioning done during quarter as discussed before. ROA was 2.7% and ROE was 11.3%. On consolidated basis, our gross loan portfolio was up 41.5% to 11,183 crore and borrower base was up 47% to 38.81 lakh. NAE grew by 31.6% to 330.9 crore. PPOP grew by 26.9% to INR 196.9 crore. PAT was down 21.5% YOY due to YOY to INR 79.6 crore on account of accelerated provisioning done during the quarter. ROA was 2.4% and ROE was 10.1%. Our consolidated results reflect the benefit of MFL acquisition, which is completed in March 20. Our FY21 financial performance will thus witness the benefit of both organic and inorganic growth. With this overview, I would like to open the forum for Q&A session. Thank you.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Kislay Upadhyay from Abacus Asset Managers. Please go ahead.
Hi, Uday sir and Divakar sir. So my question is on the cost of borrowings. Cost of borrowings have gone up for CAGL by 20 basis points and have gone down for Madura, and going up while for other NBFCs we have seen that the cost of borrowing has actually come down. How can we understand this?
Yeah, hi Kishalai. Actually, the previous quarter, if you recall, we had two facilities from NABARD and Mudra, which were at something like around 6.38 and 6.7. Obviously, the cost was much lower, but the remaining funds were all at the same level of 8.5 to 9. And therefore, it appears that the previous quarter's cost of borrowings was lower, but otherwise it's in line with our usual normal cost of borrowings and nothing otherwise.
Yeah, it was not a comparable base between Q1 and Q2 on this.
Okay, and the sources of borrowing which were at low cost, any reason we did not roll it over to the current quarter also?
No, it is continuing. It is between the interest cost for that quarter versus interest cost for this quarter on the new borrowing, actually, on the marginal cost. If you see the overall cost, there is a reduction. Okay, it is only specific borrowing. We did little borrowing in Q1, which is a lower cost, whereas we did higher borrowing in Q2, which is little higher cost. The special window was open only in Q1. It was not available in Q2 and later on.
Okay, fair enough, sir. So secondly, if I look at disbursement,
special window was given by SIDBI and NABARD. That was at lower cost.
Yeah, I remember, sir. Correct. Thank you. Sir, if you look at the disbursement and AUM trend of Madura, it has gone down over the past 4 or 5 quarters. So I wanted to understand the trend that we should expect and what is our internal strategy related to the AUM growth of Madura.
Both CAGL and Madura, there is a kind of rundown for some time because we did not disperse much in Q1 and Q2. It's already, if you see, Madura already started going back already. So we expect both the companies will go back in the second half. We have, as I already told in my remarks, that both companies have started disbursement. Together, we already dispersed 1,100 odd crores in this October, and we have next 5 months. We already started a growth trend in both companies. So we expect the next 5 months there will be a good growth, and we will have a positive growth by March in both companies.
Right, sir. But actually, if I look at YOY numbers also, there is a huge difference between CreditAccess and Madura. Madura's portfolio came down by 3.6%.
Yeah, I agree. Because between September to March, Madura didn't grow quite high last year because of the capital requirement. So now that we have the support and there's a growth opportunity, so it will grow now. And between March to September, obviously, we are not dispersed. Obviously, there's a rundown on the portfolio. Whereas CAGL grew very well between September to March. So that's what the difference.
Okay, fair. And so finally, sir, if you could mention the disbursement number for Madura in October of the 900 odd crore total disbursement you mentioned.
Correct.
What was the number for Madura in October out of the 900 crores?
160 crores in Madura as against 158 crores in the October 19. That's a positive momentum there.
Okay, and then CreditAccess disbursement would be around 750 crores.
972 crores.
Okay, 972 plus 160. Fair enough, sir. Super. That's it from my side. Thank you so much, and all the best.
Thank you, Krishna.
Thank you. The next question is from the line of Renish Patel from ICICI Securities. Please go ahead.
Yeah, hi sir. Good evening, sir, and congrats for a great set of numbers. Sir, just two questions. So one is on the disbursement side. So of course Q2 we have already mentioned that the entire disbursement towards the existing customer base. But in October, sir, what will be the split between existing and new borrowers?
Yeah, as we told earlier, Renish, till September end, we are actually working with the existing customers who behaved well and who paid well. And we told that once the COVID situation improved, we start forming new groups and all, which we actually started in October. We already acquired about 38,000 clients in October, and our percentage may be about 40% is new customer and about 60% is old, approximately. 60% is the existing customers.
Okay. And sir, in Q2, around 1,400 crore of disbursement, how much would be the top-up loans?
We don't have a concept of top-up loan, Renish. People can, because we have a multi-product company. Based on the need, we provide. So IGL remains 87-88% in our business always. If you see our consistently, it's about 85 to 88% is our IGL, which is the same trend even Q2 also. There's no change in the trend.
Mm-hmm. So what I just wanted to get a sense is how much of that disbursement would be towards the customer who have not foreclosed the loan. So maybe the extra loan which they have taken in Q2.
Yeah, I'll tell you. So that means basically when I say IGL is a fresh loan. So when I say about balance 10-12% is the other loan, like either medical emergency or a home repair or additional funding, that could be about 10-12% only.
Okay. All right, sir. And so secondly, in terms of the customer activation rate, so though it has been improving in the month of October, but somehow for Karnataka it remains low at 22%, and rest even Maharashtra is higher than that. So how should one read this number? So is there any let's say challenges in Karnataka which is sort of bringing down the customer activation rate in October?
No, actually, if you see customers total number, since Karnataka is non-paying customers are only 6%, and if we remove the existing NPA or a gross GNPA customers, which used to be the coastal Karnataka, which was in the last third quarter, which happened, if we remove that, it's only 4% of the customers. And only 4% of customers are non-paying customers in Karnataka, and this 22% is quite good actually. So next 1 to 2 months, I mean, it's within our expectation of the change. And we also need to consider that there are some intermittent issues happen in Karnataka, particularly northern part with the cyclonic torrential rains, 4-5 days impacted there also. So even with that, 22% is quite a good number out of only 4% non-paying customers.
Got it, sir. And sir, lastly, on the
November, December, it will improve further.
Got it, sir. Yeah. So, sir, lastly, in terms of course, you have highlighted about the, qualitative comments in terms of the disbursement. But would you mind sharing the AUM growth target for FY21, sir?
So we already kind of explained earlier also, we have enough ability to grow in the second half, and in line with our 60% growth comes in second half. And we already showcased the first month, already disbursing 972 crores. And then we still have another 5 months to work, and with the complete availability of capital, liquidity, manpower, branches, everything in place. So we believe we should be able to grow low double-digit numbers in terms of portfolio.
Okay, sir. Yeah, sir. That's it from my side, sir. Thank you and best of luck for future quarters.
Thank you.
Thank you. The next question is from the line of Shripal Doshi from Equirus Securities. Please go ahead.
Hello, sir. A very good evening. So my question is with regards to our collection efficiency. So as I mean, during 1Q also we used to give percentage of customers who are paying 100% and percentage of the customers who are making partial payments and percentage of customers who have not paid anything. So if you can give that bifurcation for CredAg and Madura, it would be very helpful.
Can I request Nilesh to respond to this, please?
Sure, sir. And so my second question is, like as you have indicated in the slide, that 8% of the customers have not paid anything in September for CredAg, and 7% of the customers have not paid anything for Madura. So would these customers be those customers who would have not paid anything during the moratorium time period also?
No, see, they are not, what we shown clearly, Sripa, is who have not paid in October. If I start counting all the payment come from June to here, I can show 98%, 99%, which we are avoiding. We are showing only who paid in October is more relevant, September, October. Who paid in August, July, June are not relevant, that we don't call. If I take the entire payment who made, actually it's only 2.5% customers are not paid anything from the last 5 months. What we have made only who are not paid in October and who are not paid in September. That was more relevant for us.
Okay. Got it, sir. Got it.
Nilesh, if you are there, if you can just give him the first question answer.
So, for CreditAccess, around more than 80% customers had made full payments in month of October, and for Madura also the initial two buckets, that is 100% and between 50 to 100%, there was around close to 85% of the customer groups who had made payments in October.
So that is 50 to 100% of the EMI, right?
Yeah. In Madura, it is at a group level. So in their case, 100% and 50 to 100%, it is around 85% of the groups have made that payment.
Okay.
Yeah.
Okay.
And in our case, it is over 80% have made full payment.
Okay. And so one last question.
12% are in partial payment.
Okay, got it. And so one last question was with respect to our borrower base. So sequentially, we have seen a contraction. So what would be, so if you can just throw some light, why would that be the scenario? Hello?
Shripal, can you come again?
Yeah, so my question was that sequentially we have seen a contraction in our borrower base from 4.1 million to 3.9 to close to 3.9 million. So so if you can just throw some light, why would that be the reason?
Hello? Yeah, Shripal. So overall, I think there has the management line has been disconnected.
Okay.
So I'll tell you. So see, overall over last 6 months there has been a little rundown in the book, and some of the customers, the overall customer count has reduced over last 6 months. But now from October onwards, as we start adding new customers, and as we start as the proportion of paying centers is going up, so we'll be in position to service a larger number of our existing customers as well. So to that extent, the customer count will now stabilize. In fact, in October, it has reversed the trend. And both AUM and customer count, both in Grameen and Madura, it has reversed the trend in October. And over the next 5 months, it will now be in the positive trajectory.
So sequentially, this decline, would this mean that these customers who have, who have sort of not, who are not anymore part of this active customer base, you wouldn't be lending to them again?
Yeah, so there have been, we will be lending back to them. So there have been certain customers in which cases there have also been pre-closure of the loans. So they had few weeks of repayments pending, and they have pre-closed the loans. And now, as the requirement again arises, they will be coming back. So we always have a certain percentage of waiting customers who, once they finish their current loan, after a few weeks, they will again take a fresh loan.
Okay, sir. Thank you so much.
Aman, has the management been connected?
Yes, sir. We're just waiting for the management to rejoin the bridge.
Okay.
So request all the participants to stay connected while we reconnect the management. Ladies and gentlemen, we thank you for your patience. Please stay connected while we reconnect the management on the bridge. So, ladies and gentlemen, we have the line for the management reconnected with us. We will move
sorry for this.
Yes. So we will move to the next question.
I was just checking that whether Nilesh explained to Sripad. That is what I just want to checking. We lost connection here.
Yes, I have handled this query, so we can now move ahead.
Yes, sir. We will move to the next question.
Thank you very much.
Thank you.
Okay.
The next question is from the line of Umang Shah from HSBC Securities. Please go ahead.
Yeah, good evening, and thanks for taking my question. I have a couple of them. One was our operating expenses this quarter have gone up. Should this be seen as a complete normalization of OPEX in this quarter, or probably as we start growing the business in the ensuing quarters in the second half, probably the OPEX growth could be higher, and how should we look at the OPEX ratios in the second half?
See, when in the Q1 itself, we told Umang that this is not a stable OPEX because the lot of expenses was not there at that point of time due to lockdown and all. Now that we come back to 4.6%, as we earlier also anticipated, our OPEX will be between 4.6 to 4.9, 4.8 to 4.9% on an annualized basis. Last year it was 4.9%. We can expect maybe 4.8 or 4.1% this year. For our stable OPEX will be around there, 4.8, 4.9.
Okay, all right. That's helpful. Sir, my second question was regarding in terms of our new customer acquisition that we have already started from October onwards. If you could just throw some color as to what has changed in terms of the process or our underwriting mechanism when we now evaluate new customers, because I believe the bureau data at this point in time would be inconsistent.
Yeah, we actually bureau data is it's okay now. Actually, we already started the collection data. We have updated now. We are daily updating. All of us are doing daily updating. From September 1, the bureau data is up actually. Only thing we may not get the delinquency data also available. No, so we don't have any challenge on the bureau data now. Okay. So on the operation process point of view, 2-3 quick things we did. We were earlier doing group up to 10 people. So we did, for the time being, we said only 5-6 members group other than 10 members group. And two, the center meeting and all, not the large side. We do it about 6 to 8 people or 4 to 6 people to meet, and alternative week they will meet fully. That we did. Third is we actually not allowed the customer to come to branch actually, because we don't want them to try in the local bus and not having sufficient public transportation reach the branch. So all the processes are done at the field and then directly transfer into a bank account. It's the one we did. So, but for that, by and large, there's a rural, we don't have too much of difficulty in managing things. So otherwise there is no major change. There's a change in the processes. Our existing process of what we call cash flow checking, visiting the customers' business place and home, DRT, CGT, everything intact. We are doing it.
Okay. All right. That's helpful. And one last data keeping question. Sir, what were the accelerated provisions you mentioned during your opening remarks were made during the quarter on a consolidated basis?
Additionally, 66 crores. So overall total provisioning is about 5.35% now.
At the console level?
Yeah, no, at the standalone level.
Okay. So additional 56 crores were made for CAGL.
Additional 66 crores made for CAGL. About 25 crores made for Madura. Madura's total provisioning is 4.8%, and CAGL total provisioning is 5.35%.
Okay. All right. Perfect. Thank you so much. Thanks, and wish you all the best.
Thank you.
Thank you. The next question is from the line of Sarvesh Gupta from Maximal Capital. Please go ahead.
Good evening, sir, and thanks for taking my question. Sir, first question is on collection efficiency. So post the moratorium, you would have restructured the loans for a longer tenure, right, for most of the customers. So that would have probably resulted in a higher demand figure for September and October. But it does not look to be the case as per the slide. So can you please explain what all has happened post moratorium? I mean, how has your demand grown per month?
No, there is no restructure of loans, Sarvesh, actually. It's only the extended the tenure without increasing the installment for the customers. So therefore, demand would by and large remain same only for the post-moratorium.
Okay, so it has just been pushed
customers' EMI is not changed. It's only extension of time is given to customers.
Understood. And secondly, from September to October, I would have probably expected a higher acceleration in your collection per month against the demand of that particular month. But that doesn't seem to be the case from September to October, although, we were hoping for a much higher figure. So apart from these temporary slowdown in the first half, any other reason?
Yeah, I think as I told in my opening remarks, we too expected little higher. But in the middle of October, we faced the cyclonic floods in the many districts of Maharashtra and Karnataka, where customers took a 1 week of exception because the flood situation we can't go and ask the customers. And then the next week happened to be festival season, so that impacted a bit in the month of October. And one place in Chhattisgarh, there's an intermittent lockdown has been imposed in the month of October. So that is why Maharashtra and part of Karnataka and Chhattisgarh, these three places we did not see a high improvement in month of October. So that is why there is no significant change between September to October. Whereas other places anyway already more than 94-95% already in place, so which is continuing. So with that situation already over, the lockdown is over, the Chhattisgarh also started coming back. Maharashtra things also improving. So we expect this significant change in November and December. So it's a temporary, very temporary. With the second half of October, actually it has moved to 91% in the middle of October. So a bit of the last 2 weeks of the impact, which has slightly come down, it's a completely temporary.
Okay, and given where things stand right now, and I see that your total ECL is around 5.35 on standalone and 4.3 on MFL. So, I mean, what is your expectation, assuming that things settle down by 31st of March? Then what is your expectation of the overall credit cost for this year, and do you expect write-backs on these provisions that we have taken?
We have to see, this entire quarter to take a decision on whether it's possible or not. But our expectation is to come to near normalcy by December end itself, to large extent in all states except Maharashtra, which would take maybe 1 or 2 months more. With the Maharashtra would take a little more time to come to near normalcy. Our view is, our overall credit cost should be hovering around 3.75 to 4%. Would be the own total. Majority of the credit cost would fall into this financial year, and maybe some part will fall into next financial year. So this is what our expectation maybe, but more clarity we will get by end of December.
But that you have already undertaken. So COVID provisions are that more or less over for you with this quarter.
Yeah. To large extent, significant coverage we already have. That is what I just wanted to confirm.
Okay, sir. Understood, and all the best for the coming quarters.
Thank you.
Thank you. The next question is from the line of Nidhesh Jain from Investec Capital. Please go ahead.
Good evening, sir. So firstly, on the non-paying customer in the month of October, should we expect that number is 76% of 8%, or some of the customers who have paid in September also have become non-paying in October?
There is small, but there is some people have not paid, but it is not significant, Nidesh. And the customer was paying in not paid in September and paid in October is much higher. There's very insignificant number who are not paid. Could be because of the some intermittent issues for them. But we feel those also will come back in November itself. It is not significant change. And this 22% will increase in November. That is what our expectation. November and December we should get more.
So why the optically collection efficiency number is not inching up? Because if these 20% of these 8% customers have paid, automatically collection efficiency should at least increase to 90%.
It is in some fractions actually. As I said, the last 2 weeks of October have some impact because of 2 reasons. One is flooding. 2 is the date change for collection due to festivals, which also impacted some customers because previous week they would not have paid because of flood, and next week because of date change. There was some impact of the adjustment for them also. So that is why we feel it's very temporary for the second half of October.
Sure. And when you say credit cost of 3.75 to 4%, that includes Q4 FY20 credit. That is the total COVID-related credit cost that you expect.
Exactly. So actual cost, it can be bifurcated between this year and next year, but majority will be this year. But overall cost for the event will be around there.
Sure. And sir, can you share the stage 2 number as of September 20? Stage 2 number for
stage 2 at 15 days or on a 30th, because 30th as of September within 30 days. Deciding 15 days stage 2 may not be an appropriate number at this point of time. So Maybe I think it is about 526 crores or something. I don't have right now in front of me, but maybe around that.
Okay, that is on
That is 15
days or
15 days basis.
Okay.
15 days basis.
Okay, sir. Okay, that's it from my side. Thank you.
Thank you. The next question is from the line of Roshan Chutke from ICICI Prudential Mutual Fund. Please go ahead.
Yeah, sir. So for these non-paying customers in the month of October, now you have about 8% in total. So their loans have also been rescheduled. So because they haven't paid 2 EMIs already, at 2 months of EMIs already, would you worry about how do you think about that?
Sorry, Roshan, your audio broke in the last question.
Hello?
Maybe I got what he's telling.
Okay, sir. Please.
See, these loans are not rescheduled, boss. This is actually the post-moratorium, the new installment started for them, but they are not started payment still. Obviously, they'll become NPA once they cross the time if they don't pay. We are not seeing a restructuring option, at least at this point of time, till at least 30th November, because if they're not able to pay for 3 months, and it's definitely a risk for us to reschedule that. We have to be extremely careful. So we will definitely follow up and see if they can start paying from now. As I said earlier, when I say 88%, it includes the existing GNPA before March, before the COVID. So if we exclude that, it's only 6.5% or 6% of customers actually not paid anything to us so far. We expect many of them will come back in November and December. So that's why we are talking about the credit quality hovering around 3.75 to 4%.
Okay. All right. Thank you so much.
Thank you.
Thank you. The next question is from the line of Ranesh Patel from ICICI Securities. Please go ahead.
Yeah, hi sir. Thanks for taking my question again. So sir, just a follow up on the credit cost part. So 3.75 to 4% is COVID related, or this is including the normal run rate, sir?
This is we are talking about COVID related.
Okay, and the normal run rate would be over and above this, right, sir?
Yeah, you are right.
Okay. And sir, so, just to, ask one more question on that. So, sir, what sort of steady state cost, credit cost you would like to build in, going ahead, taking the experience from the, past events? So what sort of steady credit cost, you expect going ahead on a steady state basis?
Yeah. See, normally in microfinance, the credit cost used to be about 0.5%, but this trend changed after the demonetization. Because customer understood that you can pay a little late and then you need not pay some time. So it had moved to about 0.8 to 0.9% on a steady state basis after the demon. This event is another long event for the important event. And with the moratorium is experienced by customer, we can expect a slight change in the behavior of customers because of the event. So our view is on a long-term basis, your credit cost will be between 1% to 1.25%.
Okay. So basically 20 to 30 basis points sort of increase in the number because of this change in customer behavior.
Exactly.
Okay, right, sir. And just sir, last question on this non-paying borrower pool. So you have rightly mentioned that we have not yet restructured the loans, but we would have definitely revised the EMI and must have extended the tenure also. So sir, this non-paying customer pool essentially would be from the state of Maharashtra or maybe a couple of other larger states. So is there any let's say geographical or district concentration which is not yet sort of fully recovered, or maybe the type of activity they are into? So maybe a more color on what sort of geographies they belong to, or maybe what sort of activities they are into?
So majority, as you said, it is Maharashtra and particularly southern Maharashtra. There is a reason also, this same geography which is basically southern Maharashtra, which impacted last year Q3, Q2 because of floods. And then by the time it's recovering, it hit by COVID and then the 5 months lockdown almost. And again floods and then the crop losses. So that is the geography which is a little impacted and which will take little more time. But we are confident, being, even the last year flood, it took some time, but all have come back. We are almost come back to 95% kind of thing by March. And then same thing with this, we are expecting again. So that particularly 3-4 districts in southern Maharashtra and 2 districts in coastal Karnataka, which was already impacted. The same customers probably would not have paid. So, but for that, we are not seeing any other distractions for us.
Okay, so essentially these 7-8 districts is essentially consists this 8% non-paying pool.
Majority.
Okay. Yeah. Thank you, sir. Yeah.
Thank you. The next question is from the line of Niken Shah from Motilal Oswal Asset Management.
Yeah, sir, thanks for the opportunity. I just had one clarification. When you said credit cost of 3.5-4%, we should add another about 50 to 70 basis points of normal credit cost, right? So it will be about close to 4.5% for this year.
Yeah, it may be. If you see, fairly, when you say 5.35%, there is already GNP of 1.83, which is majority belong to pre-COVID, right?
Correct.
Particularly the coastal Karnataka, what we faced last year. So by the grace of lockdown, it got extended actually. So that part is there. So, but for that, the actual credit cost could be, including those, could be about, it can reach up to 5% also.
Right. So against that, you have adequate amount of provision already being made, right, on account of COVID. So
yes.
Safe to assume that from third quarter onward, the credit cost will be more normalized, right?
Yeah. There could be temporary increase between December and March, or a come down also possibility. So our sense, significant requirement have been already covered. Even if there's a requirement, it could be very, very small based on the growth of the portfolio.
Correct. So just trying to understand that from third quarter onwards, the run rate should be less than 1% credit cost on a quarterly basis.
Yeah, we expect that.
Okay, perfect. Thank you, sir.
Thank you. The next question is from the line of Sai Kiran Pulavarthi from CLSA. Please go ahead.
Yeah, hi sir. Just continuing on one of the earlier questions. You mentioned that stage 2, based on 15-day basis, is 526 crores as of September 20. This is for standalone CreditAccess, right?
Yeah, standalone, yes, correct. You're right.
Got it. And sir, how does this number look if you have to look at on 30-day basis, probably on October? Because there is some sort of an, I think, confusion when we look at based on the September collections, and then out of the September, what percentage of the people had given the numbers, so repaid back. But if you have to look at as of October 31st, what percentage of your portfolio might be 30-day overdue?
We have not checked that October number as of now, Sai Kiran. Maybe we can take that as a separate question. Right now, we just completed the September number. We only had, looked at how many customers paid back so that we can update to you. So, basis we are not yet taken it.
Got it, sir. And then the second question, what's the update in terms of the merger process, in terms of regulatory approvals?
We are almost, see what happened is, we have to go to SEBI for approval. I think there's some rule came in saying that for the unlisted company, we have to have an audited balance sheet to apply. So we have completed that process also by this week or next week. Now that this audit also completed, next week we will be applying to SEBI.
Got it, sir. Thanks a lot, sir. Thank you very much.
The regular requirement, and the merger process is already on, because as I explained earlier, we have appointed PwC working with the both companies leadership team and creating work stream to align with the process, policies, product, technology, risk, governance, audit, everything. That's already in process. For a legal merger point of view, so we are expecting to apply next week itself.
Probably from there on 6 to 7 months, sir?
We expect to do in about 6 months' time, but eventually it's a black box. Okay.
Sure.
But our expectation to complete this before we are expecting a March, but maybe at least for Q1 we should be completing the process.
Yes. Thanks, sir. Thank you.
Thank you. The next question is from the line of Akshay Ashok from Dalal & Broacha. Please go ahead.
Yeah, hi sir. Sir, I'm not able to understand this activation percentage. What do you mean by this activation percentage in October? Which means percentage of people who have not paid or started paying, is it? Is that what it is?
Yeah, people who are not paid in September, they also started paying in October.
Okay, so 22% in Karnataka who didn't pay in September started paying in October. That is what it is.
Correct. You are right.
Okay, and then this Maharashtra number is 81% because of this floods and other situation, is it? That's the reason why the collection efficiency is...
No, Maharashtra was under lockdown till end of September from March, actually. There's a delay in customers starting their economic activity. Even today, the public transport still not fully available in Maharashtra. So the economy impact is quite long period and because of the longer lockdown. So that is why there is some delay in people coming back to normalcy. So we expected Maharashtra to take little more time. That is why the recovery time is little longer for Maharashtra. So that's the reason. Flood is intermittent in October.
Okay, but the aim is to get the collection efficiencies to 98-99%. That used to be the pre-COVID level collection efficiencies, right? What will be the time frame by which you will look to achieve that? At least by the year end, hopefully.
Yeah, we hope that to large extent we'll be near normal in other states by December itself, and by maybe Maharashtra will be by March end or so. So, but it will be definitely more than 97-98% by that time.
Okay, and then last question, I just wanted to know about the borrowings. How much total borrowing via NCD have done? Like 800 crores via the QIP. Because I daily see the issue of securities via banks, right? Those are all NCDs only, right? What you are doing with IOB. Today also there was a release via IOB. You issue NCDs. So what will be the total borrowing via NCDs? Commercial paper was done for 200 crores, I remember. And what is the total NCD borrowing?
Around 600 crore, we can see slide. Yeah, I think there's a slide on that.
Okay.
Exact number.
You're asking for this quarter or
just quarter two?
Quarter NCD. Yeah, the total NCD.
Maybe Nilesh you have in front of you or?
I'll give.
Yeah, maybe Divakar or someone can give.
It's around 340 crores.
Yeah, you can see. I will give you a special TLTRO is about 267 crores. This also NCD, and then and 150 crores of TLTRO, and then PCGS again 186 crores, that is NCD, and again after the 186 crores, October we again took 100 crore and 125, almost 300 crores is NCDs and 200 crores CP.
So sir, what is the total NCD?
NCD is about 300 crores. 375 crores.
What is the permission you have taken via the board? How much to borrow via NCD? You have taken, right, 1,000. What is the permission?
About 3,000 crores, I think.
Yeah, we have taken
almost, I think about 3,000 crores.
3,000. Okay. And okay, sir. Thank you so much.
Okay, thank you very much.
The next question is a follow-up question from the line of Roshan Chutke from ICICI Prudential Mutual Fund. Please go ahead.
Yeah, thanks for taking my question again. Just wanted to understand this, sir. You are referring to having some more provisions to be made in FY22 also. I was a little unsure because looks like you mentioned in the previous reply, you have done with bulk of the provisioning as of 1H, and Q3 onwards you should more or less stick to regular provisioning sans any surprises, right?
So I talked about credit cost. That means letting off, which can happen between this quarter and next quarter, not the provisioning.
Okay.
The credit cost, I told credit cost which can be part this year, part next year. That means there is a write-off point of view. I told that it can be spread into 2 financial years. Maybe if I am clear, I think.
Write-off is it? Write-off being spread out into within 2 years.
Yeah, correct. So the real credit cost will be when you write off the actual number, right?
Okay, understood. Got your point. Okay, thank you so much.
Thank you.
Thank you. The next question is from the line of Rishabh Doshi from Pro-Invest Wealth Managers. Please go ahead.
Yeah, hi Uday sir. I just wanted to understand, like, is there any major difference in accounting for, CreditAccess and MMFL? Like, the around 8% are zero payment customers in September for CreditAccess, and it's 7% as a group for MMFL. So, can you just, tell me how do you account for both the entities?
Yeah. There is slight difference in accounting. When you say CreditAccess Grameen, it is individual customer level, whereas in MMFL it's at a group level accounting at this point of time, which we have to change over a period of time. So that is why that is at a group level. When some of in a group, few people paid, then still we can count that the group part payment is there. That's why there's small change between this accounting is there.
Yeah. And my second question is in a joint liability group lending. Like, how does the NPA recognition work? Like, if in a group of 15, 2 people decide not to pay, then when do you make the other 13 people liable to pay? Like,
so normally immediately, but still, in this COVID situation, you can't keep pressuring. I mean, you can't make too much pressure of the customers. That is the difficulty. So the liability normally, it's more of a peer pressure rather than repressurizing. So in this situation, it's little difficult, but it's more on relationship basis. The more relationship with the group, the higher the chance of recovery in those kind of situations.
So, like, pre-COVID, how did this work? Like, exactly, like, in how many days or weeks did you recover it?
Pre-COVID, normally 1 to 2 installments, because normally 99% is already recovered. If your cost is not about very less chances that somebody is not paying. If not paying this week, they would have paid next week or 2-3 weeks time. Normally payment would have come.
Right. Okay. Yeah, that's all from my side.
Thank you. We'll take the next question. That is from the line of Sarvesh Gupta from Maximus Capital.
So just one point I wanted to get some color on from a customer behavior point of view. So one is, I think you mentioned that 80% of your customers have paid all EMIs, 12% have paid partial, and 8% is zero payment. Is that the right number, sir?
Yeah, you are right.
So then, if you can, just wanted to understand how are you thinking about credit costs from these partial payment bucket and the customers who haven't paid anything? Of course, this 8% has now become 6% because 24% guys have paid in October. So this 6% plus that 12%, how are you thinking about credit costs from these two flows? And second question from customer behavior point of view was that now that I don't know how much of group meetings and all you're doing, and what is that impact on your collection as such?
Yeah, I think the group meetings, we are able to reach out to all the groups. We are able to be connected with the very customers. So that's a high comfort that the customers who already started paying, they will lead and make the full payment in the coming months between November and December. And the non-paying customer, which is 8% and 6% now, probably slowly it will also come back to 3% or 2% by end of December. So the people already started paying partly. The intention of payment is started already. So that's why we are confident that they will come back to normalcy. So non-paying customer slowly one third will start coming back to normalcy between next couple of months. That's why we talked about a current credit cost expected by end of for the year.
So the guys who have partially paid, you expect them to be fully compliant with their payment schedule?
Yeah. Exactly. That's the intention to pay, right? So that's where they started paying. Maybe as the economy improves, they will start coming back to full normalcy because they also need funding afterwards. So majority of them are in, as I said earlier, the key districts where there was a stress because of long lockdown and some sort of delay in economic activity started. Even today, some of the activity is taking time to get the full cash flow or a full footfalls. Kind of destinations like pilgrimage destinations or travel destination, tourism destination, transportation, schools. So a couple of destinations are not yet started completely. For them, they need little more time. So we expect them to come back to normalcy.
Thank you. Take the next question as the last question from the line of Nikin Shah from Motilal Oswal Asset Management. Please go ahead.
Yeah, thanks for the follow-up. So just one question just to understand it much better. When you said credit cost of 4.5 to 5%, you included the fourth quarter as well, right?
Yeah.
So what will be for this year itself? If you can just give us some broad sense. I mean, should we subtract the fourth quarter and arrive at the conclusion for this year number?
Fourth quarter, the increase, it can't be increasing. It could be, even if we do, it could be standard provisioning, right? So we don't see an increase in the delinquency for the fourth quarter. It's only what delinquency we have will come down. The credit cost is the overall cost for the COVID. And the plus COVID, when you say about 4% for the sake of arithmetic, maybe you have a GNPA, that is the traditional. So write-off of this 4% need not be happening in this financial year. Correct. So the real cost, which is writing off, will not happen entirely this year. Maybe some will spill to next year. So, therefore, the actual credit cost for this financial year may be still at 4.5% only. Some will fall into next financial year.
Yeah, so if I understood it correctly, this year itself it will be only 3.5%, next year it will be about 1%.
Maybe, approximately. That's what I think that could be the...
Because you have already taken some provisions in the fourth quarter on account of COVID, and then balance you have taken the first quarter and the second quarter. That broadly covers for it, is what you said. So from third quarter onward, you should be normalized on it, and next year should be 1% credit cost. Is that whole conclusion correct assumption, right?
I think by and large around there.
Okay, perfect. Okay, and so what should be a AUM growth that we would be now looking at for this year and second half and next year?
As I said, it's difficult to give the exact number, but we should be able to do a low double-digit growth.
Okay, perfect. Thank you.
Thank you. Ladies and gentlemen, that was the last question for today. I now hand the conference over to Mr. Abhishek Murarka for closing comments. Thank you, and over to you, sir.
Thank you, Aman. Thank you, everybody, for participating on the call, and a big thanks to the management for letting us host it. Thanks, everyone. Have a great weekend, and all the best to the management for the next quarter.
Thank you very much.
Thank you very much. Thank you, everybody.
Thank you all. Take care. Good night.
Take care and good night.
Good night.
Thank you all. Ladies and gentlemen, on behalf of IIFL Capital Limited, that concludes today's call. Thank you all for joining us, and you may now disconnect your lines.